Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in new time. When you trade and get paid, 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 trade and get paid.
We're looking at GA. This is the 15-minute chart. I'm going to move up real quick to the 4-hour, and we'll go from there. And as you can see down here, coming up, we do have quite a bit of news coming up, so that's good. You know, we know that kind of keeps us safe. But man, the market is so this last, since May 10th. Look at what we've been looking like. You know, on the 4-hour chart. Look at this. You know, we've been sitting in this box for a little minute, so we know how to trade that already, right? We already know what to do with that. But that's the 4-hour chart, you know, so I'm not going to sit here and wait for a breakout on the 4-hour chart. So what am I going to do? I'm going to take that down to the 30-minute, to the 15, you know, stuff like that. But this 4-hour range, you know, it's been going for a little while. And but what's interesting about it is when you look at the indicator, when you look at the VDI, you got a nice bull move here, and then it's been sideways up and down. But notice that even with its up and down, even though, like, for example, here, even though that this was dropping, notice how the cloud is starting to gather, right? It's almost like a rain cloud, right? Think of it like a rain cloud. You know, it starts to, you know, be condensed. It starts to be full, if you would, of rain, and then eventually it's gonna, you know, explode, right? It's gonna let the water out, right? Well, think of it that way. Like what's happening here, even though we're seeing down movement, right here, we're seeing expansion with a blue cloud, which tells us that we have bullish movement, right? Where this bullish movement was strong enough to withstand the pressure of this bearish movement. Okay, so let me get my annotation. This bullish movement was strong enough to withstand all these bears in here, right? And notice how when you look at this, the bears came crashing down, and it pushed up. Bears came crashing down, pushed up. Bears came crashing down, right? So we're having some strong bear moves, okay? We're having some strong bear moves. But even though we're seeing that, the blue cloud is holding up, right? And why is that? It's because the bullish pressure from this move, and really the strength of this whole move over here, is still maintaining, even though we're seeing some bear movement. So you have these bear moves, and these bear moves have not been enough to overthrow the pressure of these bull moves. And because of that, that gives us some indication as to what to expect next, right? So what do we do when we see a pattern like this? We simply box it up, right? So what's awesome about the VDI, and that's where we're talking about indicators. So what's awesome about the VDI is this. When I box this up, right? Let me get that box out of there just for a second. We'll come back to it. But when I box this up, all I have to do is go from the high to the low, right? And then box it up and then trade the breakout. So all I would literally do is just take that, go to the high, drag it down to the low, right? Box it up and trade the breakout. Now you can also trade the rejections, right? So if you're like on a 4-hour chart, if you don't want to trade, wait for the breakout up here or the breakout down here, what you could do is you could be trading these rejections. So when you see, for example, this candle starts moving up and starts forming this line, right? So that's really nice. Well, here's what's cool about that. This starts coming back down, and boom, you see it comes and tests that line. It clearly rejects that line, so you could trade that way away from that line, right? So that's another really nice way to trade this, is you could literally trade away from your levels, right? You have an outer and an inner. You have an outer by the box and then an inner, right? And so you literally could just trade away from these levels and trade the box. You don't have to wait for the box breakout. So that's another way to do it. And how you would want to do that is you would box it up. Then you would want to grab a line. You want to grab a line, and you see these lines right here, the guides that the VDI gives you. Drop a line on that. Now go to the other side. Drop a line on that, right? So you have four, basically you've almost set up like an oscillator inside your box. And so when you look at this, you essentially have, imagine this as an RSI, right? Overbought, oversold, right? Imagine that. So what you could also do here in this same box is you can, drop a 50 line on there. So if you want to be completely accurate, all you'd have to do is go from the bottom of the box to the top of the box with a fib. And you see I was almost perfect, actually. So you just do that. And now you actually do have a 50, right? So if, let's say you wanted to make that into a dash line. So now, essentially what you could do is trade the rejections, trade it to the 50, right? You can take profit there, move your stop loss into profit, and continue until, price ends up coming back to the other side, literally trading it just like an RSI. And then when it rejects here, you see the rejection, you trade it down, right? Trade it down till it gets to the 50, and then trade it back to your zone down here. Now, it may not always get to exactly to the zone, but that's why you want to take profit up here. So that's another way you can do it. Trading these boxes is so fire, because here's what's happening. You always know that when you trade inside of these boxes, that the banks are always going to be safe with their own money. So if banks are going to be safe with their money and you're riding the momentum of the bank, wouldn't that mean that in most cases your money is going to be safe as long as you're doing what the bank is doing? So if you take a box and get a range and just trade it like that, drop your guide, set your high and your low, got your box. So now you have this zone, right? So now you have this like zone in here where essentially you're like, I don't want to really trade inside of here, right? Like I don't want to trade in there. You know what I mean? And then if you want to, boom, I don't want to trade inside of there. So now you have trade the rejections away, and you have your 50 line that acts as your magnet that is going to bring you, a safe way to take profit, move your stop loss, and be able to trade a range inside of a box. Most of the time, that 50 is going to come back to structure, right? So when we look at it and look left, you got structure a little bit higher than that, but if you look back all the way, that's going to be at structure. And so it's really nice, because eventually what's going to happen is it's not going to come back, right? Once you have price comes down here, let's say, rejects, comes back to the 50, right? We take our profit, maybe it rejects, comes back to the 50. Well, at some point, what's going to happen is it's going to go and it's going to not reject. It's going to continue and it's going to break, right? And so now at that point, we're done trading inside the box. Now, what are we looking for? Well, it's actually pretty simple. Look at this. If we come back here and we go from high to low, right? What are we looking for? We're looking for a golden zone, because from here to here, that golden zone has not been tested. At this point, that golden zone has not been tested. So if we look from low to high, and yes, we have this range, but that golden zone has not been tested. So essentially, if we were to get a rally, base, and then a drop, we could get a test to the golden zone, and it would test in that same structure area that we had back here, right? And so if we were to get a rally, base, drop, so rally, base, and then we drop down to this, at least to this 50, maybe even down to here, I mean, that's a nice rally base drop right there that could essentially either push back up or could continue down to test our low down here. So either one, we're okay with that. All we're looking for is structure. So rally, base, drop, let's say. If it rejects, well, what are we going to do? We can literally take the rejection off of the 50 and trade it back to the 38, which is really right inside of our zone that we had before. The same zone we had before. So we could take it from there to there. Again, we're looking at the 4 hour, but I'm showing you we could take this down to the 30 and do it, right? But if you have your top down analysis, knowing what the 4 hour looks like, now you can come back to the 30-minute and catch those sniper moves, the 15-minute to catch those retest moves, and you already know what's going on the 4 hour, right? So that would be nice right there. But however, let's say it doesn't push back up. Let's say it comes down, test the golden zone, but it breaks the golden zone, right? You see the structure right here, right? You see the structure all through here, right? So we know that that's an area that things can happen in. So what if it came down there and retested this area, right? Maybe it retests and comes back down. Well, at that point, we would be looking for it to come and test our low, because why? Right? Low, high, higher low, right? And then we got a lower high to start setting our structure. So if that's the case, if that is going to be a reversal point and not just a pullback or a complex pullback, then we would expect for this to set a new lower low. So then if it came down here and did actually set a new lower low, now we could be looking at some serious, structural move going down the other direction. So either way, we're okay with it. We like it. We like to just ride the wave. We're not unhappy about it either way. And so we're just going to catch the move no matter what.